Oracle is building such a pattern where most investors would hold no hope for forming any kind of a rally, let alone an extension to new all-time highs. But this is exactly the type of structure we often see form before major bottoms occur, before we see the reversals that eventually lead to new all-time highs. So in this video, I will share with you the exact path that I'm tracking for Oracle to still manage to form the reversal and extend to new all-time highs. I will share with you the levels of support that I'm tracking and the most relevant levels of resistance that it needs to break to strongly indicate, at the very least, that a local low within this descent is in. Welcome to the trade setup. So, in the case of this structure, we have been tracking this wave C for quite some time now. We have been looking at it to be an ending diagonal where right now we would be tracking a development within a wave 4. The area of support for such a wave 4 would extend down to the 61.8% retracement, $118. And as long as we do not get a sustained break below this level, we still hold a decently high likelihood of seeing the reversal within a wave 5 to new all-time highs within a 3-wave pattern. And to be clear, this is not the only possible interpretation. I certainly do see other possibilities for this stock to follow through, but this would probably be even ideal, as other patterns could easily lead to even much more bearish interpretations instead. Nonetheless, there is a possibility for it to reverse higher even if it breaks the levels of support within this interpretation. And I'm sure many of you would be quite disappointed that you may not be able to catch the falling knife into the 61.8% retracement, but it really might be for the best here. Then, in this structure, we have already had an attempt of a bottom. But this structure had a major flaw in the idea of having a bottom in. A flaw that is no longer present, as within this wave 4 correction, where the bottom would have been here this April, the correction within the wave 4 would have been smaller than the correction within the wave 2. Typically, we are looking for a match between these two corrections, but at the very least, we would generally like to see, especially in larger timeframes, the wave 4 match the proportions of the wave 2, and sometimes it does end up building something even larger. Well, this wasn't the case here within this initial attempt, but this has already changed, as within this reset of the yellow wave 4, we are already looking at a correction that has taken 1 month longer than the correction within the wave 2. This is no longer an issue within our expectation, and this greatly improves the odds of identifying a true bottom. Now, in terms of the pattern here, what I am tracking is a sharp correction, a zigzag correction, where we had already identified a potential 5-wave pattern down within this is the wave A. So we have been very much aware of the possibility to build just an A, B, C pattern within this orange wave B, before ultimately extending within one additional low in the wave C. Well, in this scenario, we would be looking for the ideal target of the wave C to be the 100% extension of the wave A, and that would sit right around $98. But wait, this is below the last level of support. This would imply that we would see a break of the levels of support. This could very easily imply as well that the wave 5 in yellow might not happen, and we would be required to track a different interpretation, one that could still lead to new all-time highs, but also one that could lead to a significantly larger correction to happen instead. Well, let me remove those worries, because while this is the ideal target for the wave C, it doesn't mean the wave C needs to get there. The 78.6% extension is not an uncommon target for the wave C to find the bottom within. This has already been reached, and there is a chance of a bottom here, but only if this structure, if Oracle manages to break the internal levels of resistance for a potential wave 4. You see, within this structure, we are tracking a wave C. A wave C is always a 5-wave pattern, and right now, it is most likely the case that we only have 3 waves in place, meaning that we still need to see a correction within a wave 4 and a wave 5 before seeing a bottom within this structure. Now, does this mean that it will certainly fail the yellow interpretation where we are looking for a bottom within this yellow wave 4. Actually, no. Within this pattern, it is certainly possible to build a rather weak wave 5, and it is certainly possible to even get a brief break below the yellow levels of support while not invalidating the possibility of a successful follow-through. The only expectation I would generally tend to have within such a structure is that we do not get a sustained break below the levels of support that I always share, and the same applies for resistance. Now, the unfortunate part within this structure is that we have a rather strong indication that the correction within the wave C is not complete. You see, within the wave 3, the ideal target is the 138.2% extension of the wave 1, and that would have just been reached a couple of days ago. Right here, the wave 3 nearly scraped that level. It hasn't quite touched it, but that is not really a deal breaker, and to be honest, we might see one additional low form quite easily within this structure, one additional extension. But unless we see the wave 4 correction head towards the area of resistance between the 23.6% retracement, in this case right now $136, up to the 50% retracement $154, we cannot expect a bottom to be in within this decline, and we have to primarily expect that any direct further low would primarily have to be considered an extension of the white wave 3. And at this point, we cannot know that we have a bottom in the wave 3 itself. We have to be open for extensions even lower. But so far, this is the best attempt we've had at the bottom basically ever since this correction has really started. Now, I said I would deliver to you the levels of resistance that need to be broken to identify a bottom to be much more likely. Well, this is it, the white area of resistance, because if the area of resistance for a wave 4 would get a sustained break, the likelihood of getting one additional low within this white wave 5 would have already been extremely diminished. Also to notice here, the proportions. We do not expect a particularly large correction within this as a wave 4, and if we manage to exceed a certain threshold when it comes to the proportions of this correction, the less likely it really becomes that this next wave down would indeed be a wave 5 within this orange wave C. So ultimately, we are looking for any initial sign of a potential reversal, like seeing a stronger bounce from the current levels, like seeing a break above the levels of resistance in white, or maybe building a larger initial 5V move to the upside, which would suggest with high probability that after a 3-wave correction into an internal area of support, we would expect at the very least another 5V move to the upside. At that point, if we extend within this wave 4 correction this much, as I have drawn here on this chart, it will be most likely the case that this next wave down would either not form or would not build a wave 5. It could be an internal correction, it could be a number of different interpretations, but we are talking about likely patterns here. And for me, Oracle right now is trading at pretty decent levels to consider a position, but just for me personally, I do not have enough confirmation that a bottom would indeed be in. Certainly, if I wanted to maybe look for a tiny core position, I would be able to safely consider here a potential position, a potential low, as the 61.8% retracement has nearly been touched. We have decently strong structural support in this region. We have previous lows where buyers have stepped in, where buyers have decided that Oracle is worth more. This same result could be seen within this current structure. And before we end the video, I will share with you the path that we can currently track in the smaller time frame. And what I see here is unfortunately a bit lacking. Within this structure, I really have to go into the 30-minute time frame, and I do not have much data. I certainly do not have enough to indicate a potential bottom, an initial 5V move to the upside that would suggest a bottom to be likely. But it may be the case, even if I personally do not necessarily choose to trust it too much, I would be able to track here something like a 1, 2, 3, 4, and a 5. In this case, the levels of support I would be tracking for direct continuation to higher prices would extend out to the 78.6% retracement, in which case, against these levels, I am looking for one potential additional high within the wave C that would ideally reach the first level of resistance within the white wave 4, $136, before ultimately extending in one additional low, completing the orange wave C, completing the yellow wave 4. So far, we can notice that the correction has pushed into the 38.2% retracement, and one additional thing to keep in mind here. Even if we do not trust this pattern to have 5 waves up, it is still able to extend to higher prices within this white wave 4. Within the white wave 4, we expect to build a 3-wave pattern. Within such a structure, it could be the case that this would be a wave A, it would now be looking for a development in a wave B, and ultimately an extension in a wave C to complete this correction. The same way we are tracking on the larger time frame, the yellow wave 4 to be completed by such a pattern. A wave A doesn't need this idea of a 5-wave pattern to be able to deliver. And if we even get one additional high in this development, I might be able to track a leading diagonal, which would probably end up even working out better than what we currently have in place, would allow a larger wave A and would allow more ease in building a wave B and a wave C to reach the levels of resistance. And for now, this is about what we can track for Oracle. If you want even more from me, even more opportunities, even more updates, you can check out the Patreon, but these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.